delighted to be here with you, somewhat overwhelmed, if I may say so, by the collection of extraordinary talent from the financial sector that Dovetail has managed to get into this hall. Persons who help others make a lot of money, and I imagine persons who make some money for themselves in the process. So it's a pleasure being with all of you here today. We need to work together on this. We need to ensure that all the creases are ironed. We need to ensure that we don't create obstacles for those who are actually transacting business. That regulation must be an aid to business, not an obstacle to business. Financial sector certainly is in great hands.
Our audience is eager to listen to your insights on the current and future developments of Gift City.
We have the NSE International and the India INX. So both of them have started off with trading, allowing trading of the stock index futures, which are very popular in India, the Gift Nifty, the Nifty 50 and the Sensex. So those, especially the Nifty 50 has received a lot of interest from global investors, thanks to the collaboration that NSE has set up with the Singapore Stock Exchange. So every day, I think the open interest is about anything between 13 to, $23 billion, I think, which is quite strong. And the trading on an average month is up to about $100 billion, I think. So we believe that there is a great opportunity for this product to support the Indian ecosystem, because basically it's a product derived from the domestic product. And it is brought onshore. What was originally trading in Singapore was brought onshore because of the collaboration that was possible between these two exchanges. The domestic economy will generate a lot of capital. I think today the savings rate is about 30% plus. The investment rate currently is about 30.9%. So which means that as per the calculations done by the chief economic advisor, if you have to grow at around 8% plus over the next 20-25 years, you will need to push up the investment rate to about 35%. So there is a gap of about 5%, which will have to be essentially provided through the foreign investments. So which would mean that there is need for a large amount of capital to come in the form of equity, debt into the country. So IFSCA was conceived as a platform, I think, which would enable this to happen in a big way. But also very large sovereign wealth funds, pension funds have actually turned to India for very large investments. Especially from countries like Canada, Australia, etc., and the Middle East as well.
Which is now saying that I don't need structure outside India. I can actually do whatever I can do outside India through Gift City now. And that's where probably the rules of the game are now. What we are seeing is changing. You wanted funds, you went to Mauritius. You wanted ships, you went to Dubai. Probably somebody wanted aircraft, you went to Dublin. All those financial centers offered you structures to do India business more efficiently. And probably Gift now answers the same question, that you can create the entire ecosystem in Gift, and you probably don't need any of the financial centers outside if you want to do India dollar business more efficiently. I think Gift can answer most of your questions now. And this always remains for us an important slide, because you have to differentiate. When you are in Gift, it is not India, it is not domestic India, it's a non-resident zone under the foreign exchange law of India, which means you have a same flexibility of operating from a financial center as you would get when you are operating from the centers outside India. And you can transact in all convertible 15 foreign currency with tax holiday. You have been given a unified regulator to operate from. So whatever the factors used to probably take you to Mauritius, Singapore and Dubai are now already answered by the government policy initiative in last 10 years in Gift. Probably will remember only one slide out of the presentation, which is this. Rest of the slide does not matter, because for financial world, even 1%, 2% is, the saving for which they will choose a financial center. So probably this is a bigger incentive offered by the government of India. Look, 10-year tax holiday out of 15, 10 years zero tax is a big incentive offered without any sunset. You come in the zone, you set up, out of 15, 10 years, no tax when you operate in that financial center. I think thanks to probably the Dovetail that they are able to write that, I saw that the first fund platform getting started in Gift, they kept on chasing us as a regulator, you need a platform, and we always used to send them back like a regulator. You need to study other financial centers more in detail. They again will come back, make a presentation, we need this platform. Then we'll again give them something which will just make them go back and come back. But I think credit to the team at Dovetail, they stuck to their job. They really brought out all the requirements for a platforms to operate from. And as a regulator, I think thanks to the regulatory team, to chairperson in particular, for being really an open-minded to see that why can't we bring platforms? Why can't we create those structures which help to reduce cost? Smaller funds can go into this platform rather than going into the regular cost structures. This is all now created for us.
Talking about GIFT, we've tried doing something different today. What we're trying to say is, while yes, GIFT is there, let's look at other jurisdictions as well. So there is significant money moving outside from India into GIFT and globally as well, right? The good part about all of this is the treaty benefits are, for a lack of a better word, guaranteed. It is, I'm sure a lot of taxmen here will tell you that, but it's 10(4)(d). It is in the Income Tax Act, and it is not a treaty. So typically a taxman questions a treaty. It is very, very difficult to question an act, and hence this makes a major difference to that point. Okay, so certainty of treaty or certainty of taxation is what one brings or differentiates GIFT. When you're saying you don't need to put up your own investment management entity and you leave that to a service provider. Okay. What it does, and when you set up your funds effectively, there are three broad things one needs to look at. Okay. Obviously working with the regulator, getting approval for the dedicated funds that will get set up for you. This is what, again, a service provider could take over completely. So if you set up a fund on TPFM, you don't need to do all of this on your own. You know, you guys focus on doing what you guys do the best if this is what you're looking to.
Still breaking news, when people are finding out that you can invest half of your net worth abroad through GIFT City through OPI, they're realizing it's a game changer. So lot of credit, I think lot of credit where this is due. Credit to GIFT, IFSCA for putting this together. This is utterly game changing for us in India. For ordinary Indians, this means you can now access the world through a cost efficient, tax efficient jurisdiction in India. And I think a lot of credit also to Dovetail. I don't think we would have been able to pull this off. We're a small firm. I think Dovetail, Dave, the team have been instrumental in our being able to do this smoothly, give our clients reassurance that the fund accounting, the backup work on taxation, on settlement is being done properly. So we're sitting here because we've ridden on the shoulders of giants. In all of this, the easiest part has been the compounding. The superstar here is the regulator and Dovetail.
To India and other geographies through GIFT. You mentioned about the number of investors. The total number of investors across all our institutional funds have now crossed 4,700. These are the investors from 65 plus countries. We had our own as an initial challenges where international investors, the sovereign funds, the endowment funds, the pension funds, for them this was a new jurisdiction. They were not comfortable.
Which is, Japanese investors investing in the capital markets. And the first fund, the Japanese NISA fund that was launched for India was done through GIFT City. And it was very highly covered in the Japanese media. So that trend is changing.
Almost 100 billion plus of money coming in India and 53 or 54 billion coming in the fund industry. So you can see the huge amount of interest over there. Even from a volume perspective, there is a lot of interest. And if I'm not mistaken, there are 2,500 plus investors just in Cat 3.
Example, I'll give you the example since it's an event of Dovetail itself. Dovetail, I remember almost a year ago, they came up with very wonderful presentations on bond paper about, platform play. So we hadn't heard, at least I hadn't heard, I'm new to the industry, unlike Pawan, who's a veteran there. So I hadn't heard much about what is platform play, but when I heard about it, it looked very interesting. And it looked perfect fit for a place like the IFSC to launch. So probably we deliberated about it, we did discuss, and then we looked at different jurisdictions because our chairperson is quite particular about ensuring that global practices abound, while we can always have a head start and also have investor protection in mind. And that is how this whole thing came about, and we became one of the few jurisdictions in the world to have this